Good morning, everyone. This is Marshall Giller bringing you the morning comment for March 27th. Euro-dollar did manage to get over 110 yesterday for a relatively long time, about 5 hours, but it was already back below that level when U.S. jobless claims came out. They were much better than expected. Now, even if many of the U.S. economic indicators are missing expectations, the labor data remains strong, and that's one of the two key points for the Fed. Growth isn't in the Fed's mandate, but maximum employment is. So signs of continuing strong employment sent Fed funds rate expectations and bond yields higher and supported the dollar all around. So talk of the end of the dollar rally turns out to have been quite premature. The markets will be waiting to hear what Fed Chair Janet Yellen has to say on the topic later today. Early Friday, we had the usual end-of-month data dump from Japan. The key point was that the Bank of Japan's measure of inflation that takes into account last year's hike in the consumption tax showed inflation at 0 in February. I expect Japan will continue to rely on monetary stimulus and currency for depreciation for growth, which is why I remain bearish on the yen. Now, yesterday I said that I was still bearish on oil, assuming that things in the Middle East don't get out of hand. Today I'd like to discuss these reasons in more depth. First off, inventories at the main U.S. oil distribution facility of Cushing, Oklahoma are rising sharply. Of course, Cushing only has limited storage space, and at the current pace, it'll all be full by the end of June. At the same time, production in North Dakota, the #2 oil-producing state, is set to rise in June because of various government regulations. The result would be that U.S. oil production is set to surge just as the storage tanks get full. If that happens, there'll be nothing they can do except dump the oil on the market at any price. That's why I'm bearish on oil over the next several months and on the oil currencies, particularly the Canadian dollar, Norwegian krone, Australian dollar, and the Russian ruble. Of course, this assumes that the fighting in the Middle East doesn't interfere with supplies. If it does, then all bets are off. That would change the total environment for the financial markets. There's not much on the economic calendar today. In Europe, we have Swedish retail sales for February and Norwegian unemployment for March. In the U.S., the third estimate of fourth quarter GDP is expected to be revised up. The final EU of Michigan's consumer sentiment for March is also coming out. The big thing today is going to be speeches by count them, four central bank governors and one vice chair. We've got Bank of England Governor Carney, Fed Vice Chair Fisher, BRICS Bank Governor Ingves, Norge Bank Governor Olson, and the big kahuna, Fed Chair Janet Yellen. Yellen is speaking on monetary policy at a San Francisco Fed conference entitled The New Normal for Monetary Policy. She'll also take questions from the audience, so it should be interesting. That'll be the main event of the day. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.